We'll start by introducing ourselves. Good Stock Productions. I am Amy Seifert, half of Good Stock, and we are an events company based in Stockton, but traveling all over Northern California.
I'm Ann Crutchfield. I'm the other half of Good Stock.
And we're here today because Stockton Strong Marketplace, it's a virtual online marketplace. Since our flagship event, Stockmarket, the Community Festival, has not been able to happen this year due to COVID, we decided to take things online and partner with the Stockton Strong Coalition. So the virtual marketplace is live right now. You can shop from 30 local female vendors, but only until Saturday because then it is ending. So if you guys haven't done that, please do so soon.
Stock up for the holidays. Get handmade now.
Stock up with Stockmarket. Also, the other half of this project, the Stockton Strong Marketplace project, are these webinars. This is webinar 5, financing. So, very important topic. Just a reminder, the others are on our YouTube page if you would like to go back and watch, particularly branding and marketing. Those were recorded and are live now if you're interested.
And there were a lot of good questions that went on in that marketing, especially that session. I feel like really answered a lot of questions for me too.
Mm-hmm.
Yeah, you can never stop learning.
Knowledge is power.
The more you know.
Okay, so let's meet our panelists. We'll start with Richard. You want to tell us a little bit about yourself and your organization?
Hello, everyone that made it a point to be here today. This is a very important component to business and business financing, how to access it, and hopefully removing some of the myths or concerns that you may have had. Again, I'm Richard Morris. I live in Stockton, California. I work for an organization called Main Street Launch. We are what's called a CDFI. It is a community development financial institution. You can consider us a non-traditional business lender. So we lend to businesses that are unable to access capital for an array of reasons from your traditional banks, like the Wells Fargo's and the Chases and the other banks out there. We usually predominantly focus on historically disadvantaged communities, those business owners that are located in LMI communities. When I say historically disadvantaged, it could be African American, Hispanic, Asian, women, veterans, and what have you. We lend up to $250,000 for acquisition, expansion, just typical working capital purposes and what have you. Another caveat of our organization, which I'm a proud member of, is the programmatic side, in which we provide business development, what we have come to know as TA, which is technical assistance training for you business owners, whether you're starting out or you're a legacy business. We focus on areas of succession planning. We always talk about starting a business, but we don't necessarily think about what's our exit strategy, rather that is in 50 years from now or next year. Also, supplier development and procurement and supply chain. So focusing on supplier diversity, getting those historically disadvantaged business owners products in the Walmarts and Safeways and what have you. And we also have a program called the Entrepreneur Residence Program. That program is designated for African American business owners, up to 5 twice a year in the Stockton area and the Bay Area, in which we actually pay business owners $2,000 a month to be a part of that program while they learn how to be better business owners. It is a very rigorous program, and it's something that looking forward to hopefully getting started again this next go around, as COVID has really affected all of us, whether you are someone that's providing assistance to businesses or you are a business. It's a very trying time. I just want to thank Anna and Amy for doing this. You ladies are rock stars. And again, I'm just applauding those who made it a point to take part in these sessions, because we don't know what we don't know. And I promise to be quiet now.
Yeah, I'll echo what Richard has said. My name is Trevor Nelson. I have been supporting Kiva over the last few months. Kiva is a global nonprofit that started operations in the US around 2011. What the US program looks like is a form of crowdfunding that we call crowd lending. And so what we do is very similar to Richard. We give loans up to $15,000. But instead of getting financing from directly a bank, we like to say you're going to leverage, some of your community capital and go to people like your friends and family, even some of us here on the call, to go raise a portion of your loan. And that's kind of how we underwrite. And then we have a network of over 1 million people on the Kiva platform that once you get through our first hurdle, you will then crowd fund the rest of your loan on the platform. And so we have a unique underwriting process. We like to say, and we'll talk a bit more about this, we're the first step on the capital ladder. Richard's coming in and he has some bigger loans where, no more than $15,000, as small as $1,000. And so we have some unique capabilities to help people get started, and we can dive in deeper if people are interested. But super excited to be here. Super excited to see all of you who have joined. And I think, access to capital is particularly important, especially now. And I hope some of the things we're able to share today are helpful.
I know they will be. Like Richard said, we don't know what we don't know. And this stuff is really important. I think a lot of people get really excited on the product development and the branding. Of course, the advertising, it seems like all I need to do is get my product out there, but or my service out there. There's a lot more than that. And this is a really important starting point that I think gets overlooked. So thank you guys for being here.
I think it can be overwhelming for people too. When you're starting a business, or even if you're a little bit further along in your business, you may not know what you need. You're just kind of floating there, and to take it to the next step or to be more successful, I think there's so many of these programs and things out there that we just don't know about. And so thank you guys for being here and doing what you do in general and helping all these businesses be successful, because it's hard.
It's definitely hard.
But if you're willing to put in the work,
It's definitely worth it.
yeah.
So I'm actually going to try something new, if you guys don't mind. I'm going to, before we get really into the meat of it, I think I'm going to actually put us on Instagram Live at the same time, see if anyone's interested out there. And the link to join is also in our Instagram profile. So maybe we'll get some people jumping on either Instagram Live or here. Everyone good with that?
Yes.
Cool. It is going to be a video of my screen, but that's okay. They can see and they can hear you.
What is the what's your Instagram account?
Stockmarket CA.
I don't have Instagram, but my wife does, so let's see if she has it.
So, okay, everybody. So for those of us joining us on Instagram, yes, you are looking at a video recording of my screen, but that's because we're live in a webinar right now with Richard from Main Street Lodge and Trevor from Kiva. We're talking about financing, the wonderful world of financing for entrepreneurs. You guys are a small business and need information. Main Street Lodge and Trevor. You're at the right place. So, Richard, do you, or actually, who wants to start? Richard, Trevor, you guys
so,
kind of a synonymous presentation slide deck. So whoever would like to begin, let's share your screen and have some fun.
Hey, Trevor, were you going to try to share the screen, Trevor? Or would you like?
No,
I have it up
this
here.
this is good. We'll run it just like this.
Sounds good. Just let me know when to click, brother.
Cool. We'll roll it just like that. So as kind of mentioned, the Kiva US program is all about democratizing access to capital. If you go to the next slide, you'll see kind of, one of our core tenets, which is, dreams are universal, but opportunity is not. And that's something that we kind of live by. And we want to try to figure out in as many ways as possible to kind of make people's dreams a reality. And so, without getting too much into the Kiva product, which we will dive into if there's questions, the next slide talks a lot about how do you have success in crowd lending. And before we get there, there's this idea of, where do you get money from, right? So if you're a new business, what we have here is the capital ladder, right? And so, Kiva, like I mentioned before, likes to be right there at the beginning, right? So you have an idea, you come up with some things, maybe you got that LLC or legal entity, maybe you don't. But the first, place that people go to is personal savings, what they call bootstrapping, right? Using your own money, business money that you make from the business. Then, moving this step, but not too much. You might find some gifts or some crowdfunding. Going up from there, there's some alternative institutional lenders. These are some of what they call the fintechs, right? Financial technology. We've seen a lot of interesting companies come up in that space, and they're doing some interesting work. And so super excited to see, some of those guys come into the market. Then we have people just like Richard, right? Some of the alternative community lenders doing great work to make sure that people who might otherwise not have access to capital are able to get it. And then you have the conventional banks, which are doing some of the things that we are very aware of. And so you can see some of the pros and cons of each kind of stage on the capital ladder. And I want to spend some time, really diving in on the crowdfunding and crowd lending aspect and how to find success there. So Richard, if you can go to the next slide, we'll spend just a bit of time talking about it. So one of the things that is incredibly important when you're crowd lending, which is a subsection of crowdfunding, is all around storytelling, right? And it's, what is your business? Who are you trying to, serve? What's the goal, right? You think a lot about branding kind of around this. And so you want to be able to tell that story. And it doesn't really matter if you're going to Kiva or another, kind of crowdfunding platform. Being able to tell the story of your business is incredibly important. The next thing is, what they call network mapping. And what this is all about is figuring out those people who are going to be your first lender, your first supporters, right? In the Kiva model, we actually require people to get, a small percentage of their personal network to contribute to a campaign. Other, platforms have a very similar model where in order to get traction, in order to get a lot of success, you have to have people either in your immediate network or through different channels contribute to your campaign. And so really to find success there, you want to identify the people in your network that will be willing to support and able to support, both in terms of monetary, but also in terms of sharing and getting the word out there. And then the final piece is marketing, right? When you're ready to launch, having digital assets on Kiva, one of the most important things is having a good image of who you are and what it looks like. For some platforms, there needs to be a reward structure, right? So how are you incentivizing people to actually support? With Kiva, that looks a little bit different. But for most crowdfunding platforms, you have to have a reward structure. And then, finally, what's that cadence, right, of reaching out to people? How often are you doing it? Where are you doing it? You want to make sure that you're not overselling people in your networking community, but doing it in an authentic way that really gets people excited. And so we're happy to dive in and take questions. Richard, I have, an appendix with the Kiva process. So in the Q&A, we can really dive into if people are interested in the Kiva process to really dig deep. But for now, you can skip the appendix and we can come back to it as questions arise. Okay. And I'll pass it over to you. So you can just skip these slides and hop right into yours.
All right. Thank you, Trevor. I really appreciate that intro. And just because what you just went over is so important, I kind of just wanted to touch it a little bit more. And it's because I was a branch manager at a bank. I was a premier banker. Now what I do is support business owners accessing capital and understanding business technical, just having a better business idea, knowledge on what's going on. A lot of times people don't know where to go for money. People don't know what it takes to access capital. They don't know, they might get discouraged if they went straight to Wells Fargo and got declined and they don't know about a Kiva. And Kiva crowdsourcing, just to kind of double down on what you just presented, it's people in the community that believes in your idea of a business. And when he's touched on marketing your business and your brand, you are to a point selling yourself and your idea. And people will go onto a site like Kiva and say, you know what, I definitely want to support Ann and Amy's business. This calls to me, right? So, but this Kiva and other crowdsourcing companies and organizations are a very great starting point. Another key point that he touched on is, and I'm going to go over some of these items as well a little bit, but is your own equity injection is what they call it. Definitely keep track of all the money you put forth out of your own dime to start your business, because a lot of times when you're getting underwritten for loans, they want to know that you put in, whether it's 10% or 20% of your own capital for a loan. So if you're applying for $100,000 per se, they want to see proof that you at least put in $20,000 on your own capital, right? It shows that you have skin in the game. But definitely, we're going to send this deck out. Definitely pay a great attention and detail to that ladder. It's a great visual. It's a great roadmap, and provides in-depth understanding on where to go, why you're going there, and things of that sort. So, Char, I just wanted to say thank you for that intro. The crowdsourcing is a great way to get started in accessing debt. And now we could talk about Main Street Launch. Main Street Launch, let's see here if I have a. So Main Street Launch, we've been around since 1979. We're from the Oakland area. We were once known as the Oakland Business Development Corporation. And in 92, I believe it was 1992, Bill Clinton, his administration passed legislation on the Cdfi Fund, which was designed to provide capital to businesses that were historically left out of capital, accessing capital, whether it's a woman business owner, African-American, Hispanic, Asian, what have you. And since then, a lot of large banks have seen the benefit of supporting CDFIs like our organization. So we're in great partnerships with Wells Fargo's, Banks of America, the Citibanks, Chase Banks, and what have you. Some points here that Main Street Launch, this was about 2 years old, so we're doing a little bit better. But we've helped create 368 new businesses. 419 businesses in low to moderate income were some of the recipients of our capital. 684 low to moderate income entrepreneurs, 72% of our capital dispersed, and so forth. So we're really trying to hit the ground on what they call Main Street, or even the true small business owner, which a lot of you, if you've been in business since January, you may have felt left out of some of the PPP, which is the payroll protection program, or the EIDL loans, which is the emergency injury disaster loan programs. So Main Street Launch, we are designed and eager, and our vision is to focus on the true small business and our communities. And we're hoping to continue to do so moving forward. We have some programs. Just wanted to just kind of touch on a few things. As I stated, we lend up to $250,000. Business use for working capital, payroll, furniture, facelift to the business. And this is the program that I was speaking to, which is the African American Entrepreneur Institute, and which is a 6-month program. We pay the participants $2,000 a month to take part. It is rigorous, but our hopes is that we have one applicant said, how do I know this program works? And I said, it could be that by the time you're done, you know your business is not the business for you. And that, but at least you have the skills to start a new one, right? So you never fail, you always just learn. So this brings me to something that even at the bank, whether this is personal credit or business credit, the 5 C's. I'm not sure if any of you have ever heard of the 5 C's, but the 5 C's, as we're going to learn, plays a huge role in you getting approved. And understanding what these 5 C's are is very important for your success. So the 5 C's is what lenders look for. And I want to apologize beforehand. I usually don't do a lot of text-heavy slides, but I felt that this was pertinent information. And I'm hoping that once we pass this deck over to you guys, you can use this moving forward. But what lenders are looking for, lenders are taught to evaluate loan packages based on the principle of the 5 C's of credit. And these 5 C's are capacity, capital, collateral, conditions, and character. And each document that goes into a loan package is designed to help a lender address one or more of the 5 C's. So we can start off with capacity. And Ann or Amy, anytime a question comes in that, I wouldn't mind stopping and answering that question, because definitely want to make sure these things are answered.
Yeah, I think it's not really a question, but I think because there is so much verbiage here, if
Yes.
you could just
Slide
let
through.
us know what, in your own words, like layman's
Yes.
terms, because we're all starting out. So
Yes.
if you had to define it in one sentence, what's capacity?
Your ability to pay back debt.
All right.
You know, that's
That's
it.
important.
Yes. Capacity to repay is the most critical of the 5 factors.
I see why they're looking for that.
Yes.
Okay.
So things like payment history on your existing credit relationships, we're going to look at that on your credit report. So you can show the cash flow, but if you don't have history of paying things back, then, that's going to come up.
Mm.
Capital, exactly what it is the money you personally have invested, to my earlier point, right? So you definitely want to keep track of all the money you put in your account. A lot of times when we're sole proprietors, I was going to hold this off until the end, but I think it's a great point to put to place this. You don't want to commingle your money. And to clarify that, what I mean is you don't want to, if you're a sole proprietor, we usually think that we can just open a personal banking account and do our business transaction out of that. That is a huge no-no. Not only do you want to separate your personal business finances, you want to have a true business account. There's a lot of banks out there that will provide business banking accounts that are either free to a certain extent or low monthly service charges, but you do want to keep it separate. You want to treat your business account as a separate person, as a separate entity. You don't want to go you don't want to go to McDonald's anyway, sorry, but you don't want to buy fast food, or you don't want to do personal purchases through your business account. How are you going to reconcile that when it's time for taxes?
I think that makes sense, because how are you going to get a good snapshot of how the health of
Yes.
your business if everything's all mixed together?
Yes.
Is that
Definitely.
what it comes down to?
That's exactly what it comes down to. And underwriters are not going to dive through your bank statements and decipher what is personal and what is not.
Right. That's not
Right.
their
And
job.
it's just best practice and policy.
Yeah.
So if you are commingling your money, you want to do the best job you can with allocating and reconciling your transactions and never doing it again. And you do that by opening a business account and separating your finances. I used to glance over that, but I found as I started underwriting a lot more, that happens a lot.
It
So
does.
don't commingle. Collateral just or guarantees. They're just additional forms of security you can provide to the lender. So let's say you didn't really have enough cash flow. You didn't really show enough ability to repay. You might be able to put up some of your business equipment up for collateral, which means they're going to put a lien on that piece, that item, that asset, until you pay it back. Collateral also is a personal guarantee. So if you're a business owner and your business is just starting out and you might not have 2-year tax returns, you may have to guarantee the loan as your personal self, because again, your business is its own entity, right?
So I just have to interject right there. That's scary. And I think that's why people you're just starting out as a small business. You're afraid
Yes.
to even go to the bank and even consider loan or line of credit or whatever, because it's scary.
And and I know you've had the business plan workshop and some other workshops, but that is one of the key points that you need to face. Until you get 2-year tax returns, you couldn't even walk into Wells Fargo for debt, traditional bank. And a lot of times when you go in, no matter how much cash flow you have, certain cases, if your cash flow, meaning how much money you have after all your expenses are paid, right? How much cash is flowing through your account that is accessible to you to service new debt. I'm sorry, I just lost that thought on that one.
Business plan.
Yes, so you definitely want to focus on your personal credit.
Yeah.
As a business owner. And the only way to do it is to face it. See what you need to do. It's something without the bank. I love to support my customers with understanding how credit worked and what they needed to do and not do to pay. If you don't have credit, whether it's personal or business credit, I highly recommend going the secure credit route. The secure credit route may seem not that good of an idea. It's your own money, but it's almost paying to play. You have to get yourself recognized by the credit bureaus. You have to show some positive credit history. And the only way to do that at times, if you have bad credit or you were late to establish credit, that's the only way to get back into the credit game.
I can speak from experience.
Yes.
I can tell you that I played it very safe. Never got a credit card, never got a loan, never did anything because I didn't want to get into trouble. And then you go to buy a house and you need credit. And so it's the same personal and business. You have to establish yourself somewhere.
Yes, and you can shoot me an email. I would love to walk you through. I would take a look at your credit position, and I would give you the best advice as I could to try to get yourself on a better playing field as it comes. Because you don't meet too many rich people that use their own capital. Too many rich people. At some times you have to leverage that, and in our programs, that's one of the things we have to kind of work towards is erasing that ideology. Is that you want to bootstrap your business. But if you use all your capital, you're not lendable. You don't have any cash flow. Right. So appreciate that conversation there, Amy.
Yeah, and I think, I'll jump in if it's cool, Richard. I think,
yes, please.
One of the things that's important there as well is where you are on that capital ladder, right? So as you move up, the underwriting, the risks, the guarantees that you're going to have to make, whether it's personal or from the business, are going to change. And so one of the things that we're trying to do at Kiva is really make sure that since, we're very early on, we're equipping entrepreneurs, with the right tools so that as they move up, some of those guarantees might seem a little less scary, or that you have the ability to repay. And I think, to what you guys are saying, it is scary. And we kind of call that debt aversion, right? Like nobody wants debt.
Yeah.
But, like Richard said, it's a powerful tool if you know how to use it. And that's one of the really cool things about Kiva, because it is a form of debt, right? It's relatively affordable. We think it's pretty friendly. But at the end of the day, people are still, the expectation is that you're paying them back. But one of the most cool things to watch is, when people are paying back and there's 200 different lenders from across the world who bet on you, it's something powerful. And so I think as you think about, where you actually fit in, not every lender is going to require you to have collateral. Obviously, as you go up, they will. And so it might make sense. And so I think, that's a really important point. And not every form of debt requires, all the requirements, or if they do, it might look different. So I think that's important too, is like, just because, one bank tells you, or one product tells you, they want you to put your house as collateral or whatever it is, that doesn't mean that every product will. So it might take a little more work, but there's probably something out there.
And you opened the door to a lot of comments, and I just want to pick out a few. Understanding how much debt you need is so important. It may come up in one of my slides, but if a banker asks you how much you need and you say how much I can get, it's a huge red flag. And when you're doing your financial projections and your business plan, you need to do your homework and understand how much debt you need and how much you can service. And good data in is good data out. Why you need to keep your financials separated, right? And keep track of your cash flow and your expenses and what have you. So thank you for that additional information on that. And it does make a huge difference on where you are on that ladder. And the higher you do go up, the more risk the banks are going to have to take, and the more they're going to want from you to prove that you are not a risky bet for them. So conditions focus on the intended purpose of the loan. Right now, we're in California, so I use this as an example. If you went to Wells Fargo or even a CDFI that has to deal with the SBA, Small Business Administration, or the federal government, they're not going to lend you any money if you are in the marijuana industry, right? So the conditions. So what is this loan for, right? Will the money be used for working capital, additional equipment, or inventory? You need to let them know that, because they're going to, at times, this is not something that lenders usually do often, but they will ask for proof, right? So purpose of loan and certain type of debt, you're going to have to sign a document stating that this is what you're going to do. Also, if you're doing a debt consolidation and you say that's what the money's for, you're going to have to sign something to say that you are promising to do that. Because if not, then now you're in a worse off position, right? They, the lender will also consider the local economic climate and conditions both within your industry and in other industries that could affect your business. Huge right now. I'm sure we all can understand what that one was talking about, COVID, right? So COVID is really, it has really changed a lot of underwriting guidelines. And if any of you business owners out there, if you know any business owners that have tried to access capital through the traditional means, a lot of banks are not really lending. They're not really originating any new loans. And if you were to get certain business loans, you'll have to be COVID proof per se. And there's a lot of loan programs that are out there that are geared to answer to this COVID pandemic. So their underwriting guidelines are a lot more liberal. And actually we have someone on this presentation that he may go into a little more depth on the crowdsourcing access to capital, which is something that during this time might be your best bet as well if you need access to capital. Character is huge. Will you pay me back? I know Amy asked me to sum it up. Character is, will you pay me back, right? The lender will form a subjective opinion as to whether or not you are sufficiently trustworthy to repay the loan or generate a return on funds invested in your company. Your educational background and experience in business and in your industry will be reviewed. The quality of your references and the background and experience of your employees also will be taken into consideration. So to a certain extent, that last section is really for the non-traditional debt access to capital, as well as more of your larger dollar amounts of capital, right? They're gonna dig deep into your business. They want to know, if what you have going on, if your workforce is aptitude and everything else. So they're going to dig really deep. But really, character is credit history. Do you pay your debts back on time? Do you have derogatory debts? If you had a hard time, we don't know what we don't know. Most of us was raised not understanding finances. So we may have got that college credit card. We may have did some frivolous things when we were young adults. And now we don't have any credit. I want everyone to understand that if you have things in collections, you don't have credit right now. So back to that secure credit card, how do you battle that? How do you get back into being able to access debt, right? So if you just have charge-off accounts, late payments, 30, 60-day payment marks on your credit history, you need something positive to outweigh that and enter the secure card, the secure loan, right? You're reintroducing yourself, right? And in some cases, not all cases, but in some cases, you might want to call those old accounts and see if you can work something out with them. Kind of like what I say as a parent, I parent for tomorrow, not for today, right? So you might not like me today, but so for this, in this case, it's going to be hard times, right? A lot of your money, your cash flow should go to your debt to put you in a better position, because you're, as a business owner, you need to think today, but you also always need to have a plan for the future. So character is a huge one. And these are the documents that are associated with each C of the 5 C's. Financial projections, that is a business document. Personal financial statement, or for short PFS, that is a personal document. Tax returns, both business and personal. If you're LLC, multi-member, or if you have partners, you might have to have a K1, partnership agreements. Capital, sources and uses of capital, that's just a business, your business bank account statements and business transactions, your P&Ls. Collateral, so that's on your balance sheet. That's where you have all your assets, whether it's cash or real tangible assets. Personal financial statement, again, for collateral. And business plan, conditions. I know a lot of times when you go to these workshops and they talk about business plans, it can be long and drawn out and kind of tough. But this is probably one of the most important documents when you're starting out. When I say starting out, up to 2 years. And after 2 years, your business plan is just more of a snapshot, but it has to change with the time. Your business plan has to be fluid, or your business won't. So right now, no one thought about a pandemic, but I guarantee you, there's going to be a small sentence in future on the business plan, on contingency plans, if things just shut down, right?
Yeah.
So moving forward, I can see that happening and being stated on the business plan. And then character, you have your credit report. We want to see if you're paying things back, and your resume, your history, right? So your business history, executive history, management history. So when you're trying to acquire a business, they want to see your resume because they want to see if you have industry experience in that space. And that was it.
That was it. It's
that was it.
This last slide, it's basically they want to see who you are and who your business is.
Yes.
I mean, that's as simple as that. Are you worth the risk that they're going to be taking by giving you money, right?
Yes. And I would like to ask the participants if they feel, from a scale of 1 through 10, or let's say 1 through 5, how confident they are that they have their financials in a row or in line.
Yeah, put that in the chat if you guys don't mind.
From 1 to 5, how confident do you think your financials are? Are you commingling? Do you have P&Ls?
Okay, and I also I do have a few people still on the stock market live stream, and there's questions coming in there. So
yes, let's answer.
Oh gosh, and the phone went dead.
No.
I have the question.
Okay.
So it's from Yosemite Meat Market.
All right, perfect.
He would like to know, would seeking a loan to purchase land that my business is located on be wise?
His business is located
Yeah, so
now?
he has a lot of, he's wondering if he should get a loan to buy the land that his business is currently at.
So is it a structure that is on a piece of land? So he is leasing from the landowner?
Yes, I'm guessing that's what it would be.
Is he a food truck?
He is a meat market on Yosemite Street. So they do like deli stuff, meats, barbecue.
That's hard to say because I'm not sure what his debt coverage service ratio is. I'm not sure what his financial situation is at this time, and that would be feasible. That would take a financial forecast. It would just I would have to know how much he's paying to this individual. So does he, if he owns a building, does he have a loan on the building? It must be mobile. I'm trying to figure out his situation. I'm familiar with Yosemite Meat Market though.
Yeah.
Uh-huh.
That's interesting where he's thinking of going. I mean, you can do so much more if you're the property owner.
Well, that's what I'm trying to figure out because his inquiry suggests that he is paying a lease or a loan or a mortgage on the commercial real estate, but he doesn't own the land that the commercial real estate is located on. So he's not only paying mortgage, but he's also paying lease to the landowner.
We'll try to get some more details from him.
I appreciate that because I definitely would like to give him a sound answer on that one.
Yeah.
Appreciate it.
Oh, I think when your phone went dead, he said our live feed paused on him. So he was not hearing anything.
Oh no.
Did you
I can. Is he on now?
Let's start the live feed again, Ann.
Let's see. Let me try.
But do we have any questions in the chat here? Let's see. Nope. No one wants to take that on. The 1 to 10.
Hey, but you know what? You know where you're going, where you know where you are.
Yeah.
I'm not sure that's a saying. I just made that sound right.
I like it.
Yeah.
And I just want to echo one thing that Richard said. You know, one of the things that research shows is one of the biggest indicators of success in business is having that separation of personal and business. So whether that's formal or informal, that's really important. And so, yeah, I mean, I think, you know, incredibly important there.
Well, I mean, I can just speak from experience on our part. Yeah, in the very beginning, we did commingle in the very beginning, and it makes things messy when the end of the year comes around. So I agree with what you're saying. Make things easier on yourself. Don't do that.
And the more stringent and the more conservative, I guess is the word, that you are with your business and your business financials and your business plans and your financial forecasting, you're respecting your business and yourself, right? And that will come off, whether it is or not, to a lender. And the step that you take to make sure that your business is legitimately being ran, all the T's are crossed and I's are dotted, it plays a huge role in you accessing debt and overall to your success. A lot of times when you ask people who their customer is, a lot of times they say everyone.
No.
Right. So just knowing who your customer demographic is, who are you marketing to, and where are they? What platform can you reach them? Things of that sort, right?
We talked about that on the last webinar about marketing, and very few businesses is their customer everyone. So that's important too. Knowing if you don't know who your customer is, how can you sell to them?
Yes. And yes, and budgets. So make sure another portion for finances, not necessarily will come up in underwriting, but for your sake, it's budgets and following your budget. And I'll take this time. The 5 C's are really designed for the business as well as personal, but at the bank, I knocked it down to 3 C's. And 3 C's is capacity, right? We talked about capacity is how much debt can you service? And that character portion, I wanted to break it down. So the character portion, I break it down in 3 points. That is payment history. Payment history is 35% of your score alone. Meaning, if you go outside of 30 days on a debt payment, that's going to be a derogatory mark on your credit report that you can't pay off. And the only way out of that is time, right? And then a 30% weighted portion of the character portion is utilization of your debt. So if you have a credit card that is $1,000 limit, you don't want that balance to be at $350 because that is 30.5%, right? You wanted to keep it on at 30% of your accessible debt. Once it hits $400 or $500, that's 50%. That is going to drop your score down. So every month when your statement is coming due, that's what's stuck on the credit bureau's report for that whole time. So you want to make sure that you keep it under 30%. And another one is credit history. Credit history, you had a credit card for 17 years. It's charging you $70 and you cancel it, you're actually erasing 17 years of active credit history. So you are starting yourself all the way over. And when you ever look at your credit report, it says longest credit, average credit, and time. So you don't ever want to close those credit cards that is providing you the longest tenure of credit. It's almost like if you're at a company and you want Christmas off, but someone that's been there longer than you, they get it off because they have tenure. And by canceling that 17-year-old credit card, you're pretty much going back in as an entry level. So you want to keep an eye on those things there.
So I have a question on that.
Yes.
If, say I have 3 credit cards and that really old one doesn't have a great interest rate anymore, and I'd rather only have these 2, if I cancel that, how, I mean, I get what you're saying because now it's closed, but how does that erase the history? They don't see it at all?
Because credit history is only active credit.
Okay.
So when they say credit history is what is continuously reported.
Okay. When
I said pay off, maybe try to work off some of those debts, I said some. you have a credit card that you charged off 6 years ago, right? So it says last reported September of 2014. And you go back and try to work it out, the next month is going to say last reported October 2020.
Okay.
Right. So as there's certain credit debts that you don't want to wake the beast up, if I may say. Right. So, but to your point, one thing I did hear underneath your statement, Amy, was that you're carrying debt. And that credit card has a high interest rate. I'm not going to use it. Right. Or I might just use that as my gas card and just pay it off.
Okay.
You know, so I always say credit is free money. And the point of, if you have cash back, if you have reward points, right? If you have a credit card or a secure card, just practice, right? If you have children or, you know, young adults, tell them the same. Use it for gas and get used to paying it off in full, right? You're just paying for things you're going to pay for with your cash anyway. By doing that, you're increasing your credit score and you're getting free money and cash back points. So I pay off all my bills with my credit cards. I pay them off at the end of the month, and that helps my score, and I get cash back.
Okay.
But
So
you definitely don't want to
basically
carry.
We're working the system, basically, right?
I'm gonna call it working the system.
Well, I mean, it sounds. I mean, what's wrong with that?
You're being diligent. You're being diligent with your finances. So they're working the system. They're hoping by giving you those cashback points that you're going to keep a balance by spending too much that you don't have. Right, and it take you 4 years to pay off $1,000 credit card if you pay just the interest. I mean, just the minimum payment.
But instead, you can use that to your advantage. Just keep it paid off all the time, and you're still earning points, and you're still showing active credit.
It says paid as agreed, even if you don't use it. But every now and then, you definitely want to at least keep maybe $50 to $100 limit on it, right? And that will increase your score. Just reconfirm that. We want to do some underwriting myself. By just putting on $100 on one of my credit cards, it increased my score by 15 points. Yeah.
That's basically just showing that we're active.
Yes.
Yeah.
But I do hope that the participants got something out of those 5 C's and the access to capital, and then also Kiva, the crowdsource. And I'm not sure, Trevor, because I honestly think that what's going on, unless the city or the county is coming up with some special program for businesses, we won't have access to capital because these traditional banks are not providing capital to these businesses outside of the PPP and the EIDL loans. You know, my organization, we helped Stockton with the first round of the $3,000 grant, right? And that was done in a few hours. So go ahead, Trevor. Sorry.
I definitely agree. I think it might even be helpful to talk about that a little bit. And what it means when you say, you know, banks aren't lending. But I think what I'll say, number one, is one of the things that I've been exploring is business credit, right? So, you know, one of the things that I find very interesting is basically when you wake up and you want something, you get a personal credit score. When you start a business, that doesn't mean you have a business credit score. Right. And so there's a few extra steps that you have to take in addition to getting an LLC. The most common is Duns and Bradstreet, right? And getting a number there, which is free. Anybody can do it once you register your business, but that's probably another little step that's important. And then, you know, to your point, and I'm happy to dive in, the Kiva process is you know, relatively light when compared to other you know, lending applications, and we do that intentionally. You know, I think I would agree that you know, capital is a little bit harder to access, but you know, Kiva, similar to you, Richard, we're continuing to lend. We're continuing to lend in certain markets. And, you know, if people are interested, I'm happy to dig in a little bit into the process. But also, you know, we have a website, right? You go on and click borrow and it take you right to the website. We also have a U.S., you know, website in particular just for the U.S. program because it is a little bit different than the international work. And so we have, you know, quite a few online resources for people who are interested, and we can drop it in the chat or wherever it would be helpful.
Let's do that.
For sure.
So we do have Yosemite Meat Market back on the line. He's currently leasing the space.
Oh, so he's leasing. So he's thinking about purchasing the building. If he could do that, yes, that would be a great asset for him. Commercial real estate. It would just have to make financial sense to you. In most cases, it does. A lot of times you might be paying less to own it than you are leasing it. that's something that I can start that conversation off with you. Just to kind of give you guys a heads up, my organization is looking to acquire some capital to disperse to Stockton businesses. So I would definitely send it to Ann and Amy so they can disperse it to all their participants and what have you. And but I did drop something in the chat. It's an expedited application route to the DUNS, which Trevor just talked about. You also have a DUNS number. That's something that is business. When I say 101, it's one of the first things that underwriters are going to go look for. And if you can't access business debt right away, I would suggest getting a business secure credit card to start gaining some business credit history. So that link in there will help you expedite your DUNS number application that I just put in the chat.
Awesome. So I just want to take a quick second to say we're almost at an hour, but we do have a couple of questions. If we could hopefully get through those couple questions, and then we might go a couple minutes over. But
okay.
So there was a question that I saw earlier, and that was Richard. You referenced debt. How much debt do I need? How much? I think that verbiage is kind of confusing to the average person. They're thinking, I don't want debt. How much debt do I need? None. So can you explain what you mean by that?
Definitely. So definitely. That's something that we teach all the time when we're providing TA, right? So debt is a scary term. I don't want debt. So as a business owner, let's, for instance, I'll use this hypothetical scenario. You have a business that you have what's called account payables, right? So, and account receivables. So you are allowing your customer 30 days to pay you, right? Or 60 days to pay you. In those 30 to 60 days, you still have to pay your bills and your employees and what have not, right? So I would suggest obtaining a line of credit. A line of credit helps you float through that 30 to 60 days until you're getting paid, and then you pay it off. Also, when you scale, right? If you are starting to cater, and then, I tasted your food, I'm like, you know what? I just love this food. Amy, your food is amazing, right? I would like you to cater my wedding. Okay. You're used to just doing things at lunchtime at your truck. So you might need some more equipment and you might need some more staff power, right? So you might need to get some debt for that. So really, debt is to help you scale. It's to help you grow. If you're doing it with cash, it's really tough, because what happens when things don't go right? Where's your cushion? Where's your buffer? And your cash flow won't be sufficient enough to even receive debt, because you have to have some cash flow to show that you can service debt in the first place, or you need to just service your own bills, your rent, what have you. If you're just starting out, you did your market analysis, you did your financial forecast, you did your business plan, you know how much debt you need, capital, let's just call it capital. You know how much capital you need, right? I need at least 3 months of rent, because I'm projecting that's going to take me about a month and a half for people to start seeing where I am and understanding what I have, and for my foot traffic to be at a sufficient amount where I can make enough money to pay the bills, right? So you need an injection of capital to support you in that first time period. Kiva is a great opportunity for that, right? So you might only need 10 grand or 15 grand to buy your first pieces of inventory, right? So I hope I answered that question.
Yeah, basically, it sounds like what you're saying, debt is money that they're giving you and you're going to pay back. That's all it
yes.
is. Okay.
Oh,
yeah,
sure. Sorry about that.
I'll give my favorite example of this, right? There's two things happening. COVID happened and it was a surprise. And, the holidays are happening. So Richard mentioned inventory, right? So think about it. You brought, let's say you sell clothes. You brought $100,000 of inventory to sell clothes, and you thought you were going to sell out of it, but COVID happened. Nobody was going anywhere. So now you got $100,000 of cash that you spent. You can't go back and get that cash. You could try to negotiate with your vendors to try to figure out, and maybe they'll be willing to renegotiate. But usually they're not. So you're out of $100,000. But now there's the holidays, right? So that $100,000 was supposed to turn into, call it, 150, but now you're at zero in the bank. And so when you think about debt and credit, it gives you a lot of flexibility, because had I put this, on my, accounts payable and said, look, I'll pay, whoever the lender is once I get through this, then you can go to your lender right now and say, hey, look, COVID happened. Everybody understands COVID. I need an additional, some additional time to pay you. Right. And that conversation is a lot easier to have with lenders than it is typically to have with suppliers. Right. Because suppliers are probably in a very similar situation. And so that's one example. The other example is around scale. So the holiday season comes around. Let's say you sell chocolates. Right. Well, now you're selling, you go from selling $50,000 worth of chocolate to, $100,000. Well, where do you get that gap? Right. And so that's where also credit can come in. And you asked about how much. Well, with inventory, it's pretty clear. I need $50,000 to get me there. I know I'm pretty confident that I can pay it back. And what happens is with time, that capital gets a lot cheaper. Right. And so I think, it's really healthy to exercise that muscle, because then I think, some of the things that, you face when there is, what they call a liquidity crunch, or you don't have any cash to do anything, you could kind of be in a better position if you were using some of those credit lines and figuring out ways to kind of navigate. So to me, I think, it is important to figure out how much, but it's also important to understand, debt is just a tool in the toolbox. Yeah, and when you use it correctly, it's incredibly powerful. And I think, the kind of reality of what COVID is showing is how important debt is. Whether it's some of the programs that Richard has mentioned with like some of the different ways debt can go out, whether it's, small businesses having to figure out, what to do with limited, cash reserves. I think we're starting to see that debt is a powerful tool, and it's not always, all bad.
Yeah. And what Trevor was just stating is a seasonal business, right? Let's say you had an almond field, seasonal, or pumpkin pies, seasonal. So, but yeah, I think, Amy, you cut right through it. Debt is capital, is money that you are receiving to leverage so you can scale or grow and run your business.
That's important.
Yeah.
Awesome. Thanks, guys. Well, there's some folks here listening with us. If you guys have any questions, now's the time to drop them in. We only have a couple of minutes, and then we're gonna call it a day. But while we give them time to type in any questions, I'll just give you guys the time to remind everybody how they can get in touch with you.
Okay. I had it on my slide there. It's on the deck, but I am at Richard M. at mainstreetlaunch.org. Outside of COVID and my organization not allowing me to go to my office, I am right downtown in the Huddle on the 3rd floor, Suite 310 and 312, the Huddle by Launchpad. And we are headquartered in Oakland. Right now, our organization, we are not originating loans outside of our own means. We are supporting our portfolio, right, with ensuring that they can make it through COVID. But we are also being acquired and procured by different cities and municipalities to support them with dispersing their loan funds. So right now I am working with the San Francisco African American Loan Fund, which is loans up to $50,000 for San Francisco-based businesses. We have a loan program that we're teamed up with Riverside County, Orange County. We had an SF Help. We've had, we're going to do one for Oakland. And as I stated earlier, we are hoping we're getting closer to be able to provide capital to you business owners in Stockton very soon, which is going to be specific for Stockton businesses. And I just want to reiterate a lot of information. Please take this deck. As Trevor stated, he has a huge appendix that has a lot of great information, not only about his program, about financials and finance and capital as well. Please understand how much capital you need. Please understand what this capital is going to do for you, right? And what you're going to use it for. Please continue to work on your business plans, because those are they're going to need to be furnished. Right now, I have applicants on my desk that I can't move forward on because they don't have P&Ls. They have a personal account and not a business account. They don't really understand their entity type. Just be as prepared as possible, because a lot of times, a lot of us have been left on the sidelines for this debt that's coming out for COVID, because we don't have our financials in order and we don't understand exactly how much we need, and we can't verbalize exactly what this 10 grand is going to do. I'm going to use 6 for working capital, 2 for this product, and 1 for PPE equipment. So that's all I got.
Yeah, for sure. Super exciting stuff, super good stuff. For us, I mean, my email is in the chat, but I would encourage everybody to visit our website. One of the unique things about Kiva is we work with partners like Richard to really, build relationships, make sure that you're getting the right amount, and then come into the platform ready to find success. And so coming soon, we're going to have what we call a hub. That's going to be Stockton Impact Corps, which we're really excited about. But in the meantime, what we're looking at is a lot of different hubs and a lot of organizations supporting people just like yourself who are looking to get access to capital. So if you go to our website, you can see all our partners. You can figure out who's closest to you, who you might have a relationship with, let them know you're interested in a Kiva loan, and I think they'll put you on a path to success. And so my email and the websites are in the chat, and I'm happy to be a support, but we have a lot of different great organizations that are also able to support. And so I would encourage anybody interested to really reach out and push forward there.
I was on mute.
There you go.
Well, thank you guys so much for providing all this information and just being there to support small businesses. I know when we were starting out, we didn't know a lot of this stuff existed. And so hoping that this can help people from learning by trial and error. For those of you who are still on, please give us a follow. On social media, you can find us at Stockmarket CA. Online at stockmarketca.com, and if you click on Stockton Strong Marketplace, you can see a lot of the local businesses who are selling Stockton made products.
Support the local businesses.
Yeah, and I also wanted to remind everybody that next Thursday, September 17th, is going to be the next webinar, and that's going to be with our friends over at GoDaddy, talking about building an e-commerce. And in addition to their tips, they're also going to be donating their website builder. So if you are on then, you'll be able to actually get some free stuff to help grow your business. So if you were joining us today, you'll automatically get an email on how to register for next week's, or you can do that at our website or on our Facebook or Instagram, all those good places. So thank you for being here.
Hey, again, thank you, Ann and Amy. I looked at the list of all your workshops, and every single workshop is what these business owners need to be successful, and not only just accessing capital, but just to be successful overall. So I just appreciate you ladies putting this on, and congratulations to all the participants that decided to take part in this workshop so they can better their position in their businesses.
Yep, and I just want to echo the gratitude. Thankful for the invite as well. Glad to share some of what Kiva is hoping to do, and looking forward to supporting some of the businesses and figuring things out as 2020 progresses and even beyond.
Awesome. Thank you, guys. And Yosemite Meat Market is going to have a conversation with you, Richard. I'll get you in touch.
I'm looking forward to it. Definitely looking forward to it. I have a lot of connections to the bank industry. If I can't help, I'll definitely guide him in the right direction. Yes, so I appreciate his inquiry. I'm looking forward to hearing from him.
And Aaron wants you guys to know this was very helpful and informative. So.
Awesome.
Good job, everyone.
Yes.
Also, this will be, hopefully I can get it up by tomorrow, but this will be on our YouTube page once it's edited. And we'll also be sharing this with all of our Stockton Strong vendors as well. So thank you guys again. We really appreciate your time. And yeah, stay safe and stay sane out there.
Awesome.
Definitely.
Thank you, guys.
All right. See you.
All right. Bye, guys. Have a good night.